Another important point that's come up very recently within the last couple of years is that the laws have changed. And so that a lot of the trusts that we did many years ago or even a few years ago are now out of date. And what I mean by that is the law has changed to the point where a old-time trust that's split into different trusts with one of the trusts becoming irrevocable now has caused income tax to be an issue. In the old days, most estate planning attorneys were very, very concerned about estate taxes. Now, with the exemption having grown so large, this year being 11.18 million each, and it hasn't, but it does have a sunset provision, so it will go down in the year 2026 back to 5 million plus. But with that said, a married couple, anyone with an estate under, say right now, 22 million, but even in the future under 11 or 12 million, is not going to have an estate tax. Therefore, most people now are concerned with what we call the income tax issue dealing with trusts. So when a person passes away under the old format, the trust would split into two trusts, and one of those trusts would become irrevocable, which brings in a lot of rules dealing with trustee issues and what a spouse is entitled to receive. So now what we're concerned about is we still like to do a split on it to protect spouses and to protect children, but we do it a little differently to also, we have now the availability through a law called portability that we can now port over, so to speak, the exemption to the surviving spouse, and we can avoid not only estate tax, but we can avoid income tax at the first death and at the second death. So it can become very important because, as we know, the odds of spouses dying together is very unlikely, and therefore there is a lot of times a large gap. And so that gap creates growth, especially in the San Francisco Bay Area of housing and whatnot, growth of the assets, and that can trigger an unnecessary income tax. So one of our big advantages nowadays is that we can draft the trust so in a way that we can avoid not only the estate tax, but the income tax. And I guess an important point to point out for California, even though we do have a very high income tax, we do not have an inheritance tax. So if someone passes away in California, the only tax that there are to incur at a death tax is the federal estate tax. So that's why it's so important to have the trust set up properly and to have it protect both estate tax liability and income tax liability.